Good morning, everybody. Welcome to What's Hot on the Open here at MarketStream.live. My name is Joseph Cusick from the Cusick Group, securities offered by MoneyBlock. It's Friday, it's end of the month, it's end of the quarter, and the markets continue to grind. As a matter of fact, if you jump over and take a look at the Dow Jones, it is now down 43 points off of its best levels, but it's really in a grind. In a very tight range, and it's now battling its 20-day moving average. It has for the last basically 7-8 sessions. This is the battleground, as I call it, for the Dow Jones. And at this juncture, really, you're not seeing any economic data that's coming out that's going to really catalyze this to the upside. We're not getting any information from the Trump administration as far as future policy. This has really been a muted type of headline environment right now as far as that's concerned. But what we are seeing is this. We are getting into a cycle where earnings are going to start to matter. Growth factors and future visions of what are going to drive those growth factors are going to be important. And at the end of the day, what we're going to have to see is that the consumer is still the backbone of this upside move. Taking a look at the S&P 500, it has similar action. Now, what it did do over the last session was it did take back that short-term moving average, the 20-day moving average. That means the short-term bulls, at least at this juncture, are comfortable at these levels. We have seen mixed markets in Asia. We've seen mixed markets right now in Europe, and now we're seeing these grinding markets here in the United States. It has gotten outside of this range of the 20-50-day moving average, but this is the area that you're going to have to start looking and saying, where am I going to build if you're a bull, or where am I going to start to ladder in potential short opportunities if you're a bear? Volatility is going to probably be your guidepost at this juncture. A spike in vol is going to give you a good indication of what strategy you want to implement based on your overall holistic sentiment. And taking a look at the Nasdaq, well, the Nasdaq continues to be the silver lining in this market, and it's also the strongest index and sector in the markets. Tech has been moving to the upside, but staying in, again, this grinding consolidative range. Yes, it's positive. It's above the 20, above the 50-day, so the bulls are in control, but there has been no catalyst to get over these levels. 59.32 right here. Basically, you're looking at where that high was on the 21st. You're seeing it from yesterday. It's basically hitting its head on this. This could be that resistance level that we've been looking at for quite some time. And as a matter of fact, it's been that resistance level for the last year. We're going to watch this very closely with tech. There are some potential catalysts coming up on the forefront, especially with the likes of Apple, Amazon, the big, large tech names. As well as some of the smaller biotech names. Watch those closely. That could be driving the NASDAQ. But right now, people are going to have to be prepared and strategically deploy strategies that are going to take advantage of markets that are in a consolidation at this juncture. There could be a crescendo to this, but we're not seeing it at this juncture. Taking a look at the Russell 2000, this is the market and the index that you're going to want to watch if there is going to be any ripples in the U.S. markets, in other words, domestically speaking, and if there's concerns about the policies that could be put in place for tax reform, for trade policies, healthcare, so on and so forth, this is going to be the index that is going to bear its soul, so to speak, or as I call it, the canary in the coal mine. If, in fact, we start to get another pullback in the Russell 2000, that should be a red flag that any upside in the major indices could be put at a halt. Right now, they're trading down about $1.75 at 1380, but up right now for the last couple of days above the 20 and 50-day moving averages, trying to get that momentum, trying to get that bullish sentiment moving. But again, we'll have to watch this very closely going into the close of March and into April. Taking a look at the Volatility Index, a little bit of an uptick, 20 cents at 1170, but still historically in that very low range. Again, a precipitous drop off this week from vol. It was up as high as last week, it's 15, and now it's trading at 1170. So we're not seeing that uncertainty or sense that there's going to be any big violent moves in the underlying marketplace, specifically in the S&P 500. So with that being said, we're going to look at that as a sign that right now the markets, the current grinding trend of staying in this consolidation is what it is. Taking a look at the dollar has had an impressive bounce this week. It is now in that battle zone of between the 20 and 50-day moving average, but the bears on the dollar had taken control, bounced off of almost that 200-day moving average, and subsequently now at its challenge point of the 50-day, which gets you right at the 50-day right now is trading at $100.68, trading at 142 today. It's got to hold above this 20-day at 138 if, in fact, the bulls are going to want to have any momentum on the short and potentially on the intermediate term side. I think this might run out of gas. That's going to influence the likes of crude oil. Crude oil has had an impressive bounce as well with the dollar. That is unusual when you see dollar strength and crude strength. But because of the fact that both these markets were so oversold, there is some logic behind it. Plus the fact we've seen rotation out of the global currency markets into the dollar potentially. And that was represented in weakness in the yen, weakness in the euro, as well as the pound sterling after the trigger of Article 50 against the dollar. Let's take a look at the Brent markets. Brent markets continue to hold up. This is where the oil product that would be pumped out of the Middle East, for example. We're going to watch this very closely. We've had some headlines that OPEC and non-OPEC nations are looking to adhere to the production cuts, even post the June expiration of those cuts. We'll watch this very closely. And again, you can see that Brent also had an impressive move to the upside. Bonds are mixed. The short end of the curve, the 2-year right now is down. You're starting to see that the 10-year has a slight bid here, but it has been an impressive bounce in the bonds over the last couple of weeks. Pull back here, but holding up. We'll see if this bond trade starts to pick up, if there is any uncertainty in the markets, especially as it pertains to any policies that the Trump administration is going to try to get through for both trade and for tax reform on the corporate as well as the personal side. That's going to potentially drive the bond trade. And this could be another pullback in the bonds, could be the catalyst that the equity markets are looking for further upside. All right, folks, that's it for What's Hot on the Open. Join me at 1:30 Eastern Time. That's 12:30 Central. Over lunch, grab a sandwich, sit down. We're going to talk about some cool strategies that you can start deploying in this environment. We've been talking a lot about the credit components, strategies that you could utilize in a consolidative grinding market. We're going to talk about taking advantage of bull or bear moments where we could see some big violent moves. We're going to talk about some strategies you can implement here at MarketStream.live. See you then.